And the South Association of Mine Workers and Construction Union, South African rather, that AMCU is seeking to pay hikes nearly double the wages received by entry-level workers in the country's gold mines. The demands seek an entry-level minimum for all underground workers of 12,500 Rand across all mining houses. The current average minimum rate is around 5,000 Rand. Joining us to take a look at how the gold mining sector negotiations are panning out, Peter Major, mining analyst from KD's, joining us from Cape Town. Peter, thanks as always for joining us. So that's the number on the table, 12,500 Rand. NUM has put 8,000 Rand on the table for entry-level underground miners. Does this raise the stakes?
Yes, I can. Can you hear me, Sam?
Yeah, so I mean, Peter, what are your thoughts on the latest from AMCU? I mean, is this raising the stakes when it comes to 12,500 Rand, more than doubling the amount that is as it stands right now for entry-level miners?
Well, look, they've got National Union of Mineworkers to show up, and they did a very good job of showing them up, because I think the NUM was asking for, was it 7,000 and 8,000 surface and underground. Now, AMCU's asking about another 50% on top of that. Mm-hmm. And it's totally removed from reality. It's two unions want to fight each other, but they want to do it over somebody else's property, somebody else's money. Most of the foreign investors, they're not interested in this kind of battle. They made 4 times as much buying gold and platinum bricks as they do buying a South African platinum or gold share. Mm-hmm. And so they probably no longer really care what goes on. This is a local problem, and we still own the majority of those shares in South Africa as opposed to foreigners. We're stuck with those shares. We're going to battle to sell them to anybody else. So we better all negotiate in good faith, and around realistic numbers, we're going to have a lot more shaft closures and mine closures.
I mean, the basis of their argument comes back to fair working remuneration, basically. The union saying in its submission today that on a daily basis, workers experience a declining standard of living, and the dream of sharing in the wealth of the country remains a pipe dream. And of course, we've seen so much strike action, we've seen volatility, we've seen union unrest as a result of, unhappiness on the mine. So do foreigners get that point at all, that there is perhaps a move towards fairer remuneration?
I'm afraid foreigners don't care. Money doesn't care, and even the locals don't care. The local pension funds, the PIC, the IDC, they're not putting money into our platinum and gold shares. So foreigners say, why should we put money in platinum and gold shares when your own government won't? Mm-hmm. And the workers should be blaming the government. That's where your declining living standards are coming from. Government creates inflation, not the mines. In fact, the mines, if they weren't generating dollar-based revenue, we'd have even higher inflation. So it's government that's decreasing the miners' living standards, not the mines. Mm-hmm. And it's government that's not spending the 1.1 trillion Rand a year on infrastructure, education. It's not the mines.
Mm-hmm. And at the same time, I mean, that of course your perspective, but mining boardrooms have been agreeing to above inflation wage increases for several years now. So of course, they could have had bigger profits. So how much of a profit squeeze are these negotiations, or basically the agreements that are reached, going to have on miners? We don't know what it's going to lead to, but could gold miners start to edge to a point where they're just breaking even or move into the red?
Look, a lot of them are, Sam, and if you've got a large gold mine, there will be certain shafts, certain levels that are uneconomic. If you look at Amplat's lowest cost mine is open pit, and it has very few workers. It's got imported machinery, and they could probably make money at a much lower platinum price. Mm-hmm. But Amplat's has underground sections that are losing money as we speak. So if you're a mine manager and you don't want to be fired and you don't want to go to jail for reckless trading, you're going to start closing down the loss-making sections. You have to cut your losses, because if Amplat's has another year of losses, there's going to be firings from head office on down. Cynthia Carroll's not there anymore. A lot of executives aren't there anymore because they let costs go out of control. So this isn't one-way bartering. This is nothing about demanding. This is negotiating.
Mm-hmm. And how do you rate the negotiating tactics of the unions this year?
Unfortunately, our tactics have have gone to a real bully boy. I demand, I demand. And you show me one person in this country or this planet who is happy sitting down with someone who starts saying, I demand. You know, you request. If somebody comes for a job interview and starts demanding, you finish the interview. I want to know what the person interviewing is offering me if I'm going to hire him. So if you're a mine and you've got workers demanding, there's 7 million workers looking for a job in this country. There's only 500,000 working on the mine. So for every miner, there's 12 or 14 people that would love to have his job at any pay, because any job's better than no job. So I don't know why we're letting a small minority bully the whole country.
Now, Peter, before AngloGold Ashanti's ex-CEO, now Mark Cutifani, left the company for Anglo American, he talked about mechanization and that they were in dialogues with the trade unions. And in fact, the trade unions were supportive of a new technology being brought on to mechanize mines because it was safe. I mean, how quickly is mining in South Africa moving towards that?
I think it's moving as fast as it can. All mine managers would rather mechanize than deal with unruly laborers, to deal with laborers that are always demanding, to deal with laborers that think violence, intimidation, stealing, theft, and corruption is okay. So they've mechanized as fast as they can, but there's a downside. You can bring in an expensive imported machine, but more often than not in a deep level mine, it raises your cost, it raises your risk. And now you're subservient to overseas exchange rates. You have to buy parts from overseas. It's technically very hard to maintain. And if you lose $1 million machine in an air blast, rock burst, there's $1 million gone. If you have basic South African made equipment that costs 10,000 Rand, 50,000 Rand, you're not out so much. So mechanization is only an answer in very few cases, and we've mechanized as fast in as many places as we can.
I mean, you know, as you say, it brings on new types of risks. You also talk about the skills factor to operate this type of machinery. So are these skills globally in short supply, or is it just South Africa where we're needing to bring in skills for newly mechanized equipment?
Look, a lot of this equipment is exotic. It needs very high skilled workers. But if the machine isn't fit for purpose, if the machine isn't designed for a deep level hard rock mine with heat problems, with electricity intermittently going on and off, it's no good having it. If we've got a rock drill that runs off hydraulic pressure, off hydraulic oil or water, and it drills 3 times faster than an air drill, that's a huge gain in productivity right there. So we don't need to have $1 million machines to increase our productivity. But the unions talk about life skills. They want training in life skills. Life skills are integrity, are principles, are honesty, are hard work. Those are the life skills that companies want them to bring, not high-tech skills to work on a machine that's not fit for purpose.
Let's just get back to commodity prices, Peter, because it's no secret that gold has had a rough 2013. It's down around 23% so far this year, and all the investment banks have come out and cut their 2013 forecast, 2014 forecast. What type of dialogues do you think are taking place at boardroom level for gold miners right now in this environment of depressed gold prices?
I think they're all having a bucket of cold water dumped on their heads. And anybody who thought these $1,500 an ounce, $1,800 an ounce prices were sustainable, they were also living on another planet, just like some of the unions leaders right now. And we don't need Muriel Rubini to tell us he thinks gold could go to 1,000. We know gold could go to 1,000. If the long-term price of gold, the 50 and 100-year and 200-year average is 630, then we all know gold can easily go to 1,000. Gee, we had 20 years when gold was trading below that average 630. So we've had 10, 12 years it's trading above it. It could stay here some more, but it could easily go back down to 1,000. So we have to prepare for that. And we have to have margins. A margin is your insurance. If the unions want to eliminate any margin and give all that excess to the union workers and to some of the mine managers, then when the price goes down, the mine will just close instead of sustain like it did in the 80s and 90s.